Welcome to the Deep Dive from Talk Tickers. Today, August 1st, we're digging into Regeneron Pharmaceuticals' second quarter 2025 earnings call, which just happened this morning.
That's right. And the initial market reaction was, well, pretty telling, wasn't it?
Yeah, it really was. The stock popped over 5% pre-market, opened strong, up maybe 4%, but then you saw it sort of drift down a bit by mid-morning.
Which suggests, a cautiously bullish take. Solid core numbers, definitely, but maybe some questions lingering under the surface.
Exactly. So let's hit those headline numbers first. What did we see?
Okay, so big beats. GAAP EPS came in at $12.81. That's significantly above consensus.
Wow.
Non-GAAP EPS was $12.89, also way above expectations. And total revenue hit $3.68 billion, again, beating the street estimates quite comfortably.
So strong top and bottom line performance, clearly, and product-wise.
Well, it's kind of a mixed bag, but mostly positive. Dupixent sales were, frankly, surging. Just incredible global growth there.
Still going strong.
Oh, yeah. On the other hand, the Eylea franchise, specifically legacy Eylea in the U.S., saw a decline.
Right. We knew that was a pressure point.
We did. But the newer Eylea HD actually showed some really encouraging growth. And Libtayo also put up strong sales numbers.
Okay. So overall, financially, they look pretty robust. Good cash flow, solid balance sheet.
Very much so. Strong free cash flow, a hefty cash position, and they've been returning a good chunk of capital to shareholders too.
Right. But as that market fade suggests, there are definitely nuances here. Investors are looking past the headlines.
Exactly. The commercial performance, the pipeline updates, manufacturing, lots to unpack.
Okay, let's start with Dupixent then. It's annualizing over $17 billion now. I mean, how are they still maintaining this kind of growth? What's the secret sauce?
It's pretty remarkable. A big part of it is continued leadership across all its approved indications, and they keep adding more.
Like COPD this year, right, and a couple of others.
Exactly. COPD, chronic spontaneous urticaria, or CSU, and bullous pemphigoid. These new approvals just keep expanding its reach. And management kept emphasizing the huge untapped patient population. They're saying over 4 million potential patients in the U.S. alone, and they've barely scratched the surface.
4 million, wow.
Yeah. So this positions Dupixent as a really long-term growth engine. It's not just about the next quarter or two.
And it's that unique profile targeting the type 2 inflammation pathway that helps it stand out.
Absolutely. It allows it to treat comorbidities, underlying related conditions, which is a big deal. It differentiates it from, say, the newer OX40 approaches that work differently.
So it's becoming almost like a foundational therapy in immunology.
That's the goal, I think. It's really a masterclass in lifecycle management, tuning one drug into almost a platform.
A key strategic advantage, you'd have to say.
Definitely. But then, let's talk about the flip side, Eylea.
Right. Legacy Eylea in the U.S., sales down. What's really driving that? Is it just competition, biosimilars, or is there more to it?
It's a mix of things hitting all at once. You've got increasing competition, yes. You've got biosimilars starting to encroach, definitely. But they also highlighted patient affordability issues. Apparently, those patient assistance foundations, they've had major funding gaps.
Ah, so that impacts copay support.
Exactly, which makes it harder for patients to access the branded Eylea, pushing down sales. It's a tough dynamic.
A perfect storm, almost. But then you have Eylea HD, the high-dose version. That seems to be doing well.
It is. Strong performance, good sequential growth and demand. It's actually the fastest-growing innovative brand in that whole retinal category right now.
So it is helping to offset some of that legacy decline and biosimilar pressure.
It's certainly stemming the tide, yes. The 8-milligram dose profile is clearly resonating. However, and this is a big however,
here it comes,
the manufacturing issue. That FDA site inspection at Catalent in Indiana, that's causing some real headaches.
Headaches how? What's it impacting specifically?
It's delaying the pre-filled syringe, the PFS formulation for Eylea HD, and it's also delaying label extensions.
Okay, that's significant for convenience and potentially broader use.
Very significant. And it didn't stop there. This same site issue led to a complete response letter, a CRL, for their odronextamab BLA.
Right, the oncology drug. So this Catalent issue is a major cross-portfolio problem.
It seems so. Now, management was quick to frame these as, quote, process and procedural issues, not something fundamentally wrong or structural.
And they expect a quick resolution.
They said they anticipate an expeditious resolution. They pointed out that Novo Nordisk acquired that site and is working to bring it up to their standards.
Okay, but the market reaction, that fade, suggests maybe some skepticism. Investors aren't fully buying the quick fix story.
That's likely it. Wall Street often has a show me, don't tell me attitude with these kinds of manufacturing hiccups. The risk is the timeline. How long will this really take to resolve? Any prolonged delay creates an overhang.
Right. Uncertainty is never good. Okay, let's shift gears slightly to Libtayo. How's that performing?
Libtayo's looking strong. Good global sales growth, picking up market share in its approved areas like non-melanoma skin cancers and lung cancer.
And there's news coming for it too, right?
Yes, a big one potentially. The FDA decision for adjuvant cutaneous squamous cell carcinoma, or CSCC, is expected in Q4 this year.
Adjuvant meaning after surgery.
Correct, to prevent recurrence. If approved, this could make Libtayo a standard of care for, they estimate, up to 10,000 patients in the U.S. annually. That's a significant expansion.
Okay, definitely one to watch in Q4. Now, beyond the commercial portfolio, Regeneron's always been about the pipeline. What's exciting in R&D? Let's start with linvoseltamab.
Right. Linvoseltamab just got FDA approval for relapsed refractory multiple myeloma. And the label looks, well, quite differentiated.
How so? What makes it stand out?
Several things. Nearly double the complete response rates compared to other BCMA bispecifics in this setting.
Double? That's huge.
It is. Plus, a potentially better safety profile specifically, lower rates or severity of cytokine release syndrome, or CRS.
Which is a major side effect concern with these therapies.
Exactly. It also means shorter required hospital stays for monitoring, and they have this convenient response-adapted dosing. So potentially better efficacy, better safety, more convenience.
That sounds compelling.
And it gets better. The really fascinating part is the early data they shared in high-risk smoldering myeloma.
Smoldering myeloma, that's like a precursor stage, right, before it becomes active myeloma.
Precisely. And in that setting, they saw a 100% overall response rate. And in the first 6 patients followed for a year, 5 achieved a complete response, and all 6 were MRD negative.
MRD negative meaning no detectable cancer.
No detectable cancer cells left in the bone marrow. It suggests the potential for actual disease prevention, stopping myeloma before it fully develops.
Wow, that would be a paradigm shift.
Absolutely. They're planning a big phase 3 trial against Darzalex in that setting, starting in Q4. And they have good data in light chain amyloidosis too.
So the ambition here is pretty massive for linvoseltamab.
Huge. They're talking about up to 10 registrational trials. The goal is to make it a backbone therapy across the whole myeloma treatment landscape, from early stages to relapse.
Okay, so when you say double the complete response rates, that's not just incremental. That could genuinely change how myeloma is treated versus established drugs like Darzalex.
It certainly has that potential.
Yeah.
For patients, it means a much better chance at a deep, lasting response, potentially with fewer harsh side effects and less hospital time. Competitively, it sets a very high bar. And if that smoldering myeloma data pans out, moving from treatment to prevention, that's the definition of a paradigm shift.
Definitely one to track closely. Now, odronextamab, it got hit with that CRL because of Catalent. But setting the manufacturing aside, what's the underlying potential there?
The early clinical data is still very promising, despite the CRL setback. In first-line follicular lymphoma, they showed a 100% complete response rate.
100% compared to standard of care.
Compared to about 65% for standard of care. And in first-line diffuse large B-cell lymphoma, or DLBCL, again, 100% complete response rate versus around 75% for standard of care.
So really impressive early efficacy.
Extremely. And importantly, it signals the potential for a chemotherapy-free option in these diseases, which would be a massive improvement for patients in terms of quality of life and side effects.
Okay, chem-free is always a huge goal. Now, the big one, obesity. A market heading towards, what, over $100 billion?
Easily, by 2030. It's transforming the sector.
And Regeneron's jumping in. They have a dual approach, an in-licensed drug and their own combo.
That's right. They licensed in a dual GLP-1/GIP agonist, HS2094. But the really unique part is their homegrown, first-in-class muscle-sparing combination.
The triplet, trevogrumab, garetosmab, plus semaglutide. What did the phase 2 data show there?
It was pretty compelling on the muscle-sparing front. The interim data showed it reduced lean mass loss by 50 to 80% compared to what you'd expect with just semaglutide, while actually enhancing fat loss.
And that's important because losing muscle is a big downside of current GLP-1s.
It's a major concern, especially for long-term health, metabolism, and preventing frailty. Preserving muscle while losing fat is kind of the holy grail.
But there was a catch. Tolerability.
There was. The triplet combo did see a higher rate of discontinuations. So finding the right balance between efficacy and tolerability will be key as they move into phase 3.
Okay. Any other pipeline highlights we should mention?
Yeah, quickly, the Factor XI program for thrombosis is moving fast, already in a pivotal trial. The C5 program for myasthenia gravis looks promising, aiming for a convenient monthly subcutaneous shot with data coming in Q3. And updates on allergy programs, Birch and Cat, are expected later this year too.
So a very broad pipeline overall. How are they funding all this? What's the capital allocation strategy?
Their philosophy is clear. Invest heavily in internal R&D. They see that as the best way to generate long-term value. They're putting over $7 billion into U.S. expansion, R&D, manufacturing, including a new fill-finish facility.
Doubling down on science.
Pretty much. That's priority number one. Then they supplement that with direct returns to shareholders, buybacks, dividends. And they keep flexibility for strategic bolt-on M&A deals that enhance their R&D engine.
Makes sense. Okay, let's zoom out again. What did the updated full year 2025 guidance look like? Anything surprising?
The main adjustment was to the non-GAAP gross margin guidance. They brought it down to around 83% from a prior range of 86-87%.
Why the change?
They cited ongoing investments in manufacturing capacity and also some higher inventory write-offs, so something to keep an eye on. R&D spending guidance was increased, fueling that pipeline, while SG&A was slightly reduced.
And how does Regeneron fit into the bigger biotech picture right now? GLP-1s are still hot, retinal market tough.
Exactly. The whole GLP-1 excitement continues to lift parts of the sector, which indirectly benefits companies moving into that space. But yeah, the retinal market is definitely seeing intense competition affecting Eylea, biosimilars, Roche's Vabysmo. Yeah, it's a crowded field.
Got it. And there was some talk on the call about drug pricing, specifically most favored nation and European pricing. What was the takeaway there?
Yeah, the CEO tackled that. He stressed the need for more global equity and funding innovation. He basically argued that Europe isn't paying its fair share compared to the U.S., and that needs addressing at a higher policy and trade level.
Not something one company can fix alone.
Especially, as he pointed out, since partners often control the ex-U.S. pricing for their key drugs like Dupixent. It's a complex, thorny issue.
Okay, so pulling it all together for listeners, strong results on paper, but the market's reaction suggests the focus immediately went to the Catalent issues and that gross margin guidance tweak.
Right, and analysts highlighted this disconnect, as they called it.
The disconnect
between management's very bullish view of their massive pipeline, 45 candidates, $5 billion a year in R&D, and how the market seems to be valuing that pipeline right now.
So management thinks the market is undervaluing their future potential.
Essentially, yes. They're pointing to their track record, Eylea, Dupixent, and saying, look at the exciting data we have coming. This R&D engine is worth more than you're giving us credit for.
Which makes the upcoming catalysts absolutely critical to bridge that gap. What should we be watching for?
Several key things. First, clear FDA feedback and resolution on the Catalent situation. That's needed to unlock Eylea HD's full potential.
Okay.
Then, the Libtayo adjuvant CSCC decision in Q4. That's a big potential market expansion.
Right.
Phase 3 readouts for the obesity programs, likely in the second half of 2025. And maybe a clearer picture on margins at their Investor Day in September.
Those milestones will really shape the narrative, won't they? Whether they can successfully pivot to this diversified immunology leader story.
Exactly. Or if those core franchise execution challenges keep weighing things down.
All right. That brings us to our "This is not financial advice" segment. Given that tension had pensions, the short-term headwinds versus the huge pipeline potential, what's an outrageous yet plausible trade idea here?
Okay, how about this? A paired trade directly on Regeneron stock, REGN.
Interesting. Two legs.
Two legs. First, the short leg. You could look at buying some short-dated, slightly out-of-the-money put option.
Why puts?
This would be a way to potentially capitalize if those Catalent manufacturing delays drag on longer than expected, impacting Eylea HD, or if a legacy Eylea erosion gets worse. That market fade suggests this downside risk might not be fully gone.
Okay, so betting on the near-term uncertainty, what's the other leg?
The long leg. Simultaneously, you'd buy long-dated, maybe deep out-of-the-money call options on REGN.
Going long further out, what's the thesis there?
This is the conviction. Bet on that massive, potentially undervalued pipeline. You're betting on Linuzific becoming a multi-billion-dollar myeloma franchise, given the data we discussed.
The best-in-class potential.
Right. And you're betting on the obesity strategy paying off both the licensed drug and especially that unique muscle-sparing combo finding its niche. It's basically aligning with management's belief that the R&D engine will eventually drive a significant re-rating, making the current Eylea noise seem minor in comparison.
So short the near-term execution risk, the long-term innovation potential.
Precisely. It captures that core tension we've been discussing. A bold trade, yes, but it reflects the current dynamic.
Okay. So, wrapping up. Regeneron put up a strong quarter financially, really driven by Dupixent's continued dominance and signs of life from Eylea HD, plus Libtayo.
Yep. And underneath that, you have this incredibly broad and advancing pipeline in immunology, oncology, and now metabolism, showing their commitment to science.
Their long-term strategy is clear. Invest in R&D, drive innovation. And just a reminder, everything we discussed today, especially that trade idea, is purely for informational purposes. It is absolutely not financial advice.
Definitely not. Always do your own research.
So the big question for you to think about, as Regeneron pushes forward with this ambitious pivot, moving beyond just ophthalmology, will these huge bets on a very broad, high-risk pipeline actually lead to sustained growth and a higher valuation? Or will these persistent execution challenges, like Catalent, keep holding the stock back?
That's the multi-billion-dollar question, isn't it?
Yeah.
We'll be watching closely.